I think, what's going on in crypto, because people do want to hear about that, and it's been quite stunning. A British Virgin Island court ordered the liquidation of Three Arrows Capital, 3AC, after creditors sued the crypto hedge fund for failing to repay its debt. They had $3 billion in assets under management. They had a huge position in the now defunct stablecoin Terra and its token Luna, and they were trading on some massive amount of margin. How much and what deposits they were using to do this, we will find out. Now they're being forced to be liquidated. 3AC owed Voyager Digital $650 million, could not pay it, which sent Voyager stock down 60% and caused them to need a bailout from Sam Bankman-Fried, which has led to SBF, as he's known in the industry, bailing out a couple of other major folks in crypto. He provided a $200 million credit line to Voyager Digital. This is a Canadian crypto lender. They'll lend you money against your crypto. And FTX provided a $250 million credit line to BlockFi. FTX is obviously SBF's company. And according to early BlockFi investors, the FTX credit line would wipe out all existing shareholders. So we're starting to see the really onerous term sheets to keep these things alive. This is, of course, in the face of an entire crypto collapse, with many crypto coins seeing what we saw in growth stocks. Is this the end of crypto? Is it going to rebound again? What are your thoughts? Chamath, Sachs, Friedberg, who wants to start on crypto?
Did you guys see the chart that I posted into the group chat that showed Bitcoin activity as a function of year and value? Nick, can you just put that up just so that we can look at that together? The crazy thing about this chart, when you look at it, and it's pretty obvious, is that we are collectively in one way, shape, or form basically trading up ever since 2018, really, with all the stimulus. Because if you look at, the mean price of Bitcoin, about 2018, it was a nothing burger. What we were talking about was, a price that was sort of between a few $1,000s, $2,000, $3,000,
10,000,
and then 3,000. And then all of a sudden, when all of the stimulus money hit the market, look what happened to it. Yep. But I think something unique also happened, which is that people really understood how to run these very complicated off-chain Bitcoin ARBs. And I think we should explain what those are, because those are what's behind the Three Arrows Capital. It's behind, I think Sam had this kind of oblique tweet that said, some of these exchanges are actually already insolvent. They're already the walking dead. So the first thing to keep in mind is that, this is a completely unregulated market, right? There are no market makers per se that actually have reporting requirements to any regulatory authority. There aren't any clearing houses. There isn't a way for us to understand systemic risk as it builds in the crypto market. So what happened starting in 2018 and 19 is people realized the following things were true. It's sort of what we talked about last week. You go and do some crazy round. You mark up some phantom equity in a company. That company then issues tokens. You then list the tokens, not on, a blockchain per se, obviously, but in a place where trades can happen off-chain, right? And there's a bunch of exchanges where these things happen off-chain because it's one, company, and then they have a bunch of segregated sub-accounts. And what happens is when these things initially get listed, retail goes crazy, the price goes up, folks basically dump on retail. And you spin that loop as fast as you can, and you can extract an enormous amount of money. Along the way, all these things like DeFi all of a sudden popped out of nowhere. And it's like, hey, you can earn 15, 16, 17, 18%, just deposit the Bitcoin. And so folks would deposit Bitcoin. But then what would happen is like the places where those deposits were held would then need to obviously find places to make that 11, 12, or 13%. And so then they would go off chain to some other random person who was offering to pay them even more than that. And they would try to arb the difference. But it all catches up with you because when something like a Terra goes to zero, all the Bitcoin that was used to basically, run that DeFi process around Terra vanishes. And then all of a sudden you, the lender, are like, hey, can I have my Bitcoin back? And the broker's like, well, actually, I don't have it. I lent it to somebody else. Let me ask that someone else. And they're like, I'm sorry, I don't have it, but I have these Terra coins, because I was running some ARB and now it went to zero. And that's essentially what we're seeing right now. So we have two big problems. And then I think we have a third that's kind of funny. The first big problem is like, obviously in the absence of any regulatory oversight, this stuff is going to happen. Systemic risks are going to build up. That's what we're facing right now, is an enormous amount of systemic risk, largely around Bitcoin. A bunch of this money, I think, has been essentially just vaporized. And so all these people that try to find their deposits, especially in custodial accounts in off-chain brokers, may be SOL at some point. And I think that's just going to be a huge shit show if that actually happens.
And to be clear, Chamath, they don't have the keys to their own Bitcoin. They gave money to a custodial account. They then did this lending, went out to get them to 15%, and they don't have any recourse here. They can't get their Bitcoin.
Well, look at this article.
Why
now.
real Bitcoin owners put them in a wallet and own the keys.
Does anybody have recourse to this Three Arrows Capital and all of this other interrelated parties that are now, gone completely bankrupt because of this scam? The answer is absolutely not. So that's the first problem. You have absolutely zero oversight, which means systemic risk has been built up in the system. The second thing is that exactly what you just said, Jason, is that people don't even understand chain of custody here, which is that you thought that you owned this Bitcoin. It turns out you actually may not actually own them at all. You thought that you were properly lending them out. You actually don't. There is no enforceable contract, it turns out. And so I think that's going to be an entire set of different legal issues that are now going to come to the surface because people who actually legitimately lent this stuff out, for example, like if you short a stock and you go and borrow stock from any one of us, there are really tight guardrails. If you wanted to go and put a credit derivative swap on against debt, there's a central clearinghouse that makes sure you're not over levered. You have to go and get audited by a bank to even get the kind of account that allows you to put these derivatives on. None of that was possible in crypto. And then the last thing, which I think is kind of funny, is that we've had to listen to every millennial and Gen Z market observer in crypto tout how this is not like boomers, and they turn out to be the same. I mean, this is the funniest thing of all. It's like of all of the times you've had to hear how it's so different, it turns out it is entirely the same. Entirely the same. In fact, worse.
The custodian issue is definitely a major one. Sachs, what do you think is happening in crypto right now?
The price is obviously going down a lot. I don't really have a new point of view on it. I'm mainly pissed off that SBF is trying to raise my taxes in California.
Explain that.
Sam Bankman-Fried, he runs FTX, and his company, he lives in the Bahamas. Okay. And there are probably reasons for that related to liability or taxes or something like that.
Can you tell us what FTX does?
They're like a Coinbase competitor, but they obviously think it's beneficial to be offshore and not under U.S. jurisdiction.
And they're very profitable, right?
Yeah, supposedly they're super profitable. I mean, he's worth like $10 or $15 billion. This is my understanding. So he's been very successful at this. I don't know why they're in the Bahamas. I think either they're in there for securities regulation reasons or for tax reasons, but it's one of those two. In any event, he doesn't live in California, and yet he is sponsoring a ballot initiative here that would add a 0.75% tax on incomes over $5 million to finance a pandemic prevention institute of his design. He's doing this with Dustin Moskovitz, another billionaire who doesn't know what to do with his money. You may remember that Dustin was the guy funding Chesa Boudin. In any event, this pandemic prevention institute would be governed by an unaccountable board as opposed to something like the University of California. This is like them using the ballot initiative system to fund their pet philanthropic projects. I mean, there's really no need for this. I mean, first of all, sounds
like something that should be done federally.
Yeah, exactly. First of all, it's looking in the rearview mirror in terms of like a budgetary priority. But even if you believe this was a priority, I don't know why it'd be the responsibility of California taxpayers exclusively. And even if it was, you'd want to do it under, say, the UC system, some sort of accountable board, as opposed to having it report to, Sam and Dustin. So it makes no sense. And this is really going to hurt the California tax base, because if you start raising taxes on, California millionaires, more of them are going to leave the state, and then that tax revenue leaves the state. And so it actually hurts the general budget. And that's why, California Teachers Association, for example, opposes this, is because they know that this is going to have a negative impact on core services. But what's offensive to me is, so first of all, this is just a stupid idea in like every possible way. But what is a guy who lives in the Bahamas doing funding ballot initiatives in California to raise our taxes, thereby worsening the California fiscal situation to fund his pet philanthropic projects? If you're worth $10 billion, just fund it on your own, Do it through your family foundation. I don't know why you need to raise the taxes on all of us.
Yeah, that's very bizarre.
I think.
Why is he giving?
Well, the simple answer is because I think it helps curry favor with politicians that he needs for other things. That's why you would do it. That's why I would do it.
This is currying negative favor because, first of all, every millionaire in California should be up in arms over this. But even, I'd say,
I don't think we know his game plan.
Yeah, but I'd say even liberal politicians and interest groups in California, like the Teachers Association, don't want this because the money's not going to a cause they support, and it will almost certainly drive down the state's tax base, right? Because people on the margins are going to leave. We already have the highest taxes in the nation. We're at 13.3% for the top end.
We have $100 billion surplus for a reason. All these IPOs, all of these venture capitalists, CEOs, and rank and file tech workers are just paying massive amounts of tax here, and they're leaving.
Right, but that's highly levered to capital gains, right? And so last year we had a boom market. We now know in hindsight that it was inflated. That was all driven by this liquidity bubble. So do you think that's going to be the case this year? I think we're due for a huge budget shortfall next year because there's going to be no capital gains
this year. They better hold on to that $100 billion for sure.
The California tax base is highly leveraged to this boom-bust cycle, and driving the top earners out of the state is only going to worsen that impact. So, but again, I question, why is a guy in the Bahamas? It'd be one thing if it was just Dustin doing it, I guess, but I don't understand why Sam's taking the lead when he's not even a California taxpayer.
Because I think he's a very sophisticated player in not just crypto, but frankly, regulated and unregulated finance. And look, I think he spends a lot of money in DC as well. And I think that he has a very thoughtful game plan. And then, when you look at who his parents are really, really smart, thoughtful people as well, 2 law professors at Stanford. And so I suspect, not knowing and having spoken to him, that I think that there's a really specific strategy that these guys have around who they need to influence and what they care about, and then willing to, as a pass-through, fund those things in order to curry the influence that he needs for the things that he cares about. And I suspect that it's that kind of horse trading, which is, I think it's pretty typical in U.S. politics. The question, though, is what will happen if FTX has to really talk about everything that's actually happening in crypto. I'm sure that FTX could do a lot to help understand a lot of this off-chain activity, some of the, especially the stuff that's really in the gray, especially the stuff that's going to come to light over the next few years. You have to understand, guys, we've torched $2 trillion, and it's not of institutional capital, this is overwhelmingly retail capital.
All of this is going to inspire a lot of district attorneys and DOJ activity. The discovery is going to be bonkers, and it's all going to be regulated to the point in which it kills a lot of the opportunity. I think this is going to become the most regulated space we've ever seen.
If the goal here was to curry favor, then I think Sam must think there's not going to be a red wave in November, because I don't think Republican politicians are going to look very favorably on a guy who's using his money to raise taxes in a state he doesn't even live in.
All right. Let's move back to the crypto piece.
Let's move back to crypto.
Yeah, let's move back to the crypto piece here.
That's the bigger thing, not a few $1 million of lobbying.